Would you define somebody who is a financial role model, someone who's also in the industry, such as a banker, a financial advisor, or planner, or are you looking mostly from like familial and friendship kind of mentors?
Yep. So it would be someone that you someone that you can relate to who's either in the industry
Mhm.
or is a family member or a friend.
Gotcha.
Um, right. And this is a total aside, but we also found that, a lot of families, especially in underrepresented groups, like they talked about finances with their parents maybe less than once a month growing up. Um, so that's like a totally different issue, but there's just a real lack of relatable role models for so many people, and it's something that I think we need to address, and it's something that we're looking at the Fool also in terms of how do we, as we say, how do we create a more motley world of investing in finance?
I love that.
I love this point you're bringing up, Jack, because I think it's important for folks in the LGBT community who are on the path to financial independence, who will have financial security, to show it in a way other than just the things that you have. It's important for us to not just be, look at my new shoes, my new cars, the vacation I'm taking, to show off that we have financial security, but to actually talk to our friends about it. It's this why John and I do what we do, folks. You all know this. This is the whole goal of this podcast, is for more folks to become more financially not only sustainable, but eventually to the point where we're financially secure and independent. And we know that the whole reason why the queer community has become more and more and more accepted in the world today is because of personal stories. The stories of financial independence, stories of financial well-being, stories of making the right financial decision, and sometimes the wrong financial decision. Those stories we need to talk to each other about. We want our healthcare workers to be financially strong. We want our mental health workers to be financially strong. We want our the people in the arts, every single field. We want all of us. We don't want just the people who work in who are celebrities to be financially stable in this world. Although we know there's plenty of stories of celebrities who are not financially stable, even though we think they are. We need to start telling these stories. So thanks for bringing that up, Jack.
Yeah, we spotlight investors like me. We spotlight investors from underrepresented groups. We have some LGBTQ plus investors in the works that are going to be in the series soon. But yeah, that's the whole goal, is to just elevate folks who maybe you wouldn't necessarily see when you walk into your bank branch, and tell their stories, because they are important.
Yeah, 100%. And I'm going to go back to an article that David and I wrote in 2017 or 2018 for Forbes. And it was about trying to get more transgender folks into financial planning. One, it helped, financial planning is a great way to increase your income and your financial security. But two, we need more representation of the community in financial services. And financial planning is so much more than, what you saw on the movie Wall Street, right? It's actually coaching and therapy and providing, helping people uncover what it is they want. And then once you uncover that, helping them create a plan to achieve the things they want. It's so much more than just selling hot stock tips and trying to sell products and services. You're actually a therapist if you're a really good financial planner. You're actually a life coach if you're a really good financial planner. The numbers and the investing part are just a tangential component of all of those myriad discussions that you would have with a client. So I kind of go back to that. That article was about getting more transgender folks into financial planning, but maybe we need to sort of update that and just get more LGBTQ plus people into financial planning, and then being more out and open with who you are, so that you can connect with more of the community, and maybe more people who also don't necessarily feel comfortable dealing with the stereotypical archetype of financial planners.
That yeah, financial planning is personal. And if you can't put yourself in, or at least try to put yourself in the shoes of the person that you're working with and try and understand what unique challenges they're facing and what unique goals they might have, it's not going to be a good match.
Yeah. Yeah. So moving along, another data point that came out that struck us was that 56% of LGBTQ plus Americans don't have a non-retirement investing account. So that's an account other than a 401k, a traditional IRA. 17% of respondents said they don't know how to invest, making it the most cited reason, and 14% said they don't know what to invest in. So talking about, kind of going back to what David talked about earlier. And then another roughly 20% don't think investing is for them. Either it's too risky or intimidating, or the tools aren't necessarily made for them, or there's 3% of the population who feel like investing is unethical. What's the largest takeaway from all this from your perspective, Jack?
I think, again, it goes back to the inclusivity problem. I mean, I'll just speak for myself. Investing, like the world of investing, very much reads to me like an old boys club, old men's club. Um, that's not to, the Motley Fool certainly does not try and come across like that. We try and come across as the complete opposite. But I think by and large, there is a vibe and a culture around investing, maybe a couple of different vibes and cultures, not all of them necessarily inclusive, right? I don't think that's that controversial of a take. And when I was kind of reading the results to this question, the question, that I had, and maybe I'll flip back to you guys, how active are efforts among funds and brokerages? So I'm thinking like the Robinhoods, the E-Trades, the Fidelities, that kind of market them as the every person's investor, every person's brokerage. Are they really actively trying to reach out to people who don't meet the typical investor archetype? Are the messages that they're using, the marketing, the branding, do they resonate with the LGBTQ plus community? Do those companies seem like their values align with your own? Is that like an important aspect in terms of choosing a brokerage? Yeah, I think I'll start there. I have another follow-up question, but I'm interested. Sorry to flip the script.
No, that's fine. We love being interviewed. Do you want to go first, or do you want me to?
Well, I think, first of all, I'll say that John and I, we don't have our eyes and ears everywhere, right? It's really hard, especially in the world of targeted marketing today with what companies are able to do online. Although I will say that the recent changes in targeted marketing has really completely excluded the LGBT community. That companies like Facebook and Pinterest and Instagram, and they all have specifically said you can no longer target your products and services to the LGBT community, which means that those companies that are trying to do good for the community are finding it harder to reach the community. So say, for example, if a Robinhood or a Wealthfront or a company like that really wanted to say, we're going to create an ad and we want it to be targeted to the LGBT community, they are no longer able to do that. So shame on Facebook and shame on Instagram and shame on all those company, Pinterest, for doing that, because you're actually making it harder for us to reach the communities that we want to improve. But that being said, it's still so few and far between. I don't think I've ever seen a Robinhood commercial or advertisement that is LGBT specific, right? And I don't. I think you mentioned this whole idea that roughly 7% of the population identifies as LGBT, and that's probably understated. Imagine what the world would be like if 7% of the commercials, advertisements that we saw or heard were with any flavor of LGBT folks. I mean, the Christian right would be up in arms because they'd be like, oh my God, they're shoving this down they're already saying that they're shoving this down our throats, right? But if we had that many, so there's just no way. I mean, it's just not happening, and we don't see it. John and I were, before we were the podcast, were saying, if the efforts of companies like the Fidelities, the Schwabs, the Vanguards, the Merrill Lynch's, if they were putting as much effort into reaching the LGBT community as they are reaching women investors, the world would be a completely different place for LGBT investors, but they're not. And we don't see the example happening from the more socially responsible investing firms either.
I have a
Yeah,
lot
and
to
it's
say,
a
but I'll let you
oh,
go
go
first,
ahead.
Jack. No, I have a lot to say, but I'll let you go first, Jack.
I'll just say, I've had like similar conversations about other inclusivity issues, other non-finance topics. And really like what it all comes down to is, from a business perspective, it's just money left on the table, right? It is 20 million American adults, their money is just left on the table. And I find that argument really compelling, even if you're not really into even if you don't want to have, a conversation about diversity and equality and everything that comes along with that, it's 20 million Americans who could have a brokerage account with you. Okay. Like, what are we doing? Right.
100%. And I'll go back to. Go
So I'm just going to say, it's interesting to kind of play with those numbers, though. You're right. 20 million Americans. If 20 million Americans in the LGBT community all felt compelled to put $1,000 into an emergency savings account, that's $20 billion. How would that change the banking industry if an additional $20 billion all of a sudden was in the banking industry as a way to protect our community, right? They would be salivating to have an extra $20 billion, right? But like you said, it's just not on their radar.
Yeah, I think it's not on their radar, because having been both in front lines in financial services as well as in the back office, I know that the as altruistic as financial services firms want to be,
Pretend.
and I think there are some firms, and definitely there are definitely people in some firms,
Yes,
who want to do the right thing. It all comes down to assets under management. AUM is the driving force behind every decision. And I think there's just this perception of, well, we know where the assets are. We've been going after it for hundreds of years. Let's continue to pursue that, because what's not broken, don't bother fixing, right? So we know that the pale, bound, stale members of society have the bulk of the money. So while we put the rainbows up and we have the pride flags and all that stuff, let's just make sure we still focus on AUM, because we're more concerned about our bottom line, and even more so concerned about our shareholder value. And I'll go back to what we talked with MV Lee Badgett about, the economic case for LGBTQ equality, is that a rising tide lifts all boats. And it was, I know the data is stale, but from the Williams Institute, 2018, I think, maybe older, LGBTQ community in the US alone has nearly $1 trillion in purchasing power. That's probably changed now since then significantly. And I don't know, I can't really predict whether it's better or worse, but it's probably changed. But still, regardless, that's a ton of money that most studies have shown that we're spending on travel, entertainment, dining out, that if even we just took a fraction of that money and put it into banks for emergency savings, or put it into the stock market that could use a little bit of a life support right now as we speak, that would do a lot to help a lot of folks, and also improve the assets under management, and also improve the financial security of the community. So I think there's just a disconnect. It's we know what works, and that's the going after the old white men, or when the money transitions to their spouse, going after them. But then we're forgetting about all the other opportunities that are on the table, because we don't necessarily have the systems or the perception that could work for us.
Couldn't agree more. I mean, hopefully the data here provides a little kick in the butt, and gets folks thinking about that.
Yeah. And maybe it'll change as that money starts to roll into the inheritance pockets of all these queer people when their parents start to inherit that money to them. And all of us queer folks start to say to the Schaubs, the Fidelities, and the Vanguards, sorry, we're going to take our money somewhere else where we feel more comfortable.
Yeah, for sure. We'll see.
So I'm going to wrap this up, going back to a topic that we've kind of had threaded through the entire discussion. But less than half of LGBTQ Americans feel ready to make financial decisions. And I think that's kind of the reason I want to wrap up with that is I kind of think that's both our platforms, the Motley Fool and the Queer Money Podcast, Debt Free Guys. It's where it's kind of what we do. So what do we think? We've touched on a little bit. What do we think is behind that lack of confidence or that lack of education among LGBTQ individuals? And then most importantly, what can be done about it?
Yeah, I'll just try and quickly summarize a couple points that have been made throughout. I think, and again, I'm not the best person to speak to this point in particular, but there's a lot on the plate of the average LGBTQ plus individual. That's the sense that I'm getting. And, that creates mental stress. It creates time constraints, and all of those things are important to educate yourself financially about the decisions that you need to make and get your own financial house in order. I think we had a great conversation about the importance of financial role models and the need to not just elevate stories of success, but do so in a way that instills good habits. And I think more of that were to be done, and more good lessons were shared instead of new clothes or travel pics, that could go maybe a long way. And then I think more fundamentally, like we've discussed throughout, there's an inclusivity issue. You need to be able to call up your bank or walk into your bank or a friend and feel comfortable talking to someone who you trust as a professional to talk you through some really important financial decisions. And if you feel like you don't have someone you can do that with, that's a really fundamental problem for the industry. So yeah.
Totally agree. Mr. Alton Schneider.
I mentioned this earlier. The sharing of stories, I think, is really important. As queer folks, we have to tell the stories of how we got into $51,000 in credit card debt, or how we paid off that debt. And I know some folks listening on the podcast are like, we know that story. We've heard it over and over again. But every week we have new listeners who have not heard those stories, right? And so we need to tell our stories. Be proud. One of the things that I did pull from this study, John and I get a lot of what we would consider either trolling or attack on Twitter from the anti-capitalist wing of the LGBT community. But what we found so interesting is, of the 2,005 people that were interviewed in this study, only 3%, so we're talking about 6 to 7 people, felt like investing was morally wrong. So if you're hearing the anti-capitalistic chant from a lot of people, take it with a grain of salt. It doesn't mean you cannot improve yourself financially. Listen to the folks who are actually wanting you to improve your life rather than tear you down. As we've said before on Twitter, there are people within our own community who do not want to see us progress. It's sad, but it's true. They want us to be with them in their misery. And sadly, that's every community. Every community has people like that, right? Focus on the ones that are telling the stories that inspire you to do better with your life. And I think that's I always look back to when John and I first got into the personal finance space, and we were hanging around at personal finance conferences. We were hanging around with African-American women. And we were just so inspired by the fact that these women would run around with their friends talking about where they were getting the best deal on diapers, or how they were saving money buying groceries, or how they saved up enough money so that they could buy their kids new clothes for school so they looked the best. They got so inspired and so excited about how they were doing better as a community financially. We as a community can do that too.
Nice. Yeah.
100%. I'll let you speak for me, sir. I don't think I would add anything to what you just said. So, Jack, I know we have a lot of content coming out to get this study in front of everybody's ears and eyeballs. That's not exactly how I meant to say it. But how can our listeners keep up with all things Motley Fool, as well as all things about this study?
Sure. So fool.com for our content, fool.com/research for content like we've just discussed. Motley Fool Money is our daily podcast with market and stock coverage during the week. And then we do interviews and financial education on the weekends. And yeah, I would just plug the Investors Like Me series that I spoke to briefly before. It's just a really great effort to get some numbers behind the importance of inclusivity and highlight folks who otherwise really haven't gotten the attention that they deserve in the investing world.
Absolutely. Yeah. I'm excited to dive into more of that ourselves. And you're Motley Fool pretty much on every social media platform as well, right?
Yep, that's exactly right.
Perfect. Well, Jack and Motley Fool, thank you so much for your time. And thank you so much for agreeing to do this study. There's just a wealth of information from it, a huge amount of opportunity, we think, to help the LGBTQ community reach financial security and then hopefully abundance. And so thank you so much. And we look forward to more content and more support coming out.
Yeah, thank you guys. It's been an absolute pleasure working together. Not to sound too formal, it's been a party. It's been a blast. Love whenever I see you guys on my calendar, it just brings me joy because I know it's going to be a good call. But this has been a really important project, and I think hopefully we'll do some more work together in the future.
Again, thank you, Motley Fool, for agreeing to partner on this important study, and thank you, Jack, for being a guest on the show.
To you, our listeners, thank you for listening to another episode of the podcast. Here's your quick money takeaway from this episode. We'll go back to what Jack recommended toward the beginning of the episode. To the extent that you can, automate saving. Add $3 or 3% of your income, or increase what you're already saving by an extra $3 or 3%. Just lean into it.
Then join us next week when we talk with financial advisor Laura Latourette about socially responsible investing. Yes, you can invest in the stock market according to your values.
Thanks again and have a great week.